Welcome back to Golden Rule Radio, your weekly recap of the precious metals markets and the fundamentals and news that move those markets. And without further ado, Miles, let's jump right into gold this week.
I'll jump in and say technicals also move the market.
So does manipulation, but that was last week's show.
No, well, gold here is this week trading in a very tight range between 1480 and 1500. Some would call that manipulation or lack thereof. I call it a consolidation.
And since my name is Miles and he asked me...
And my name is Robert.
It's great to have Robert back on the show, by the way.
Yeah, Robert's exactly right. I mean, we've had this declining wedge for a while now, hopefully stepping down to at least one of the fib numbers, although we've yet to do it. And here, just since the end of September, we've actually kind of built this sort of internal short-term wedge pushing up. And when we look at silver here in a second, I think that's going to end up mattering. So still waiting for a breakout one direction or the other. My gut still says more down, so we have an actual consolidation and D-wave finish into the fall, and then obviously pushing into winter and next spring, like we do tend to see gold take a jump up around December, January.
I'd say it's also possible for gold to rally here $20-$30 before it heads back down.
It's I know, that's what I'm getting nervous of.
Yeah, I mean, it looks really nicely bouncing off of 1480 and could potentially bounce up to that previous high around 1535 before we see weakness. We may not see weakness, but if we did, that there is potential for a little rally here.
Right, and ultimately, you do have to get above that like 1555, 1560 number to really call the next leg. But any type of major movement in or out of that wedge can definitely signal something in the market, some additional interest. While we're big fans of buying when the price is low, as most of you know, most people buy when the price is high and sell when the price is low, despite that not being the most recommended investment strategy out there. So fingers crossed for slightly lower pricing, but if we do see things continue, just remember buying in the 1600 range when we're talking about these multi-year market cycles and we're talking about targeting gold at substantially higher prices. What's $50?
Yeah, another multi-year market cycle. I know it's jumping ahead a couple of months, but if you go back and you look at the months of December, Robert's talked about this in past years, it does tend to be a month of profit taking, especially when gold has had a good year. It wouldn't surprise me one bit to see it weaken into the first of the year and then take off.
Yeah, that seems to be the last 5-year trend, is to find some kind of bottom with the gold price leading into mid-December, late December, or early January, depending on the year. And then come January, like we've talked about the last couple of years on the show, you want to be in. So we're right here at the end of October. I think you have about a month and a half time frame to see potentially gold weakening, hopefully giving you a buying opportunity. And then again, before the end of the year, you want to be in.
Now, I mentioned a second ago that silver has actually done something we haven't seen yet in gold. So this is certainly changing the pattern we've seen over the last few years, gold leading the charge. Silver had a slight breakout. Now, it's a sideways move outside of the declining pennant pattern. Now we've got some sideways trading, but silver did break that top channel. Now it's got a long way to go to get back to the old high from back in early September, but we did have a little crack of the pattern since we started coming down in September. So keep an eye on silver. If silver continues to climb, I wouldn't be surprised to see gold short on its heels.
I love the opportunity here in silver, quite honestly. The next breakout to me, we're going to exceed that $20 figure and probably go to 23. And, this is an opportunity, again, as we always stress, anytime you get those lows, we don't have to ring the bell. If you're close, again, opportunity to step in.
Yeah, something I noticed in the gold-silver ratio chart was that from the high being, 93-ish,
yep.
down to the low, the midpoint in between the high and the low was about 86.25, 86.3. So when it declined, the ratio I'm talking about, gold-silver ratio chart, as it declined, it bounced off the low. It has rallied back and completed back to that 50% mid-level point.
Interesting.
So if it plays out that way, that could be fairly significant. Might mean nothing, but I'm reading into it and trying to see things maybe that aren't there, or maybe they are, but it has finished that. So that would lend credence to silver continuing to outperform going forward as we go up with the metals prices.
Yeah, that 93 all the way down to around 78, and now we're back up to 85 to 1, and that ratio is what you're talking about.
Exactly.
That drives action to me far more significantly than the actual spot price does. So don't be afraid of just the spot price getting away from you. Watch that ratio as well. Don't let it run on you. You don't want it dropping quickly on you and you missing the opportunity for the future swap.
Because it sure drops quickly when silver starts rallying against gold. It moves quickly, as we've seen.
Well, and comparatively, look how fast the platinum, palladium, or platinum gold ratio moved when those prices moved about 6-8 years ago. I mean, that happened, massive swing from top to bottom in just a few months' time. So you don't want to miss those runs when those prices decide they're going to rebalance against each other. Speaking of platinum,
Yeah,
I think
platinum's up.
Yeah, platinum's up strong, and in fact, platinum is coming into the low end of that, of kind of the floor of the previous high, right at the 382 fib. But we came down almost to the 618 fib and have bounced back up strong. And frankly, if we get above this like 920 price on platinum, I wouldn't be surprised to say that we're kicking off our next leg. Platinum really never put in a bear. You know, platinum did come down strong, but it came down real quick and it's bounced right back up. So
I'd be interested to see if it actually did what Robert was just describing. Doesn't it seem as if it did about the 50% retracement?
yeah, in fact, a little bit deeper than that, and then came right back up strong. So
Yeah, up
silver came
25
to
today.
50. Platinum almost came to the 618, and gold hasn't even come to the 382. So we could see the white metals replacing gold as being the leading metal, which is what we're all expecting with where the platinum gold is, platinum palladium, silver to gold. All of those white metals need to take substantial moves, not just in terms of dollars, but in terms of their relative pricing.
And we've been talking about this for a while, and it looks like it's starting to play out, especially with platinum. Platinum has put in the bottom, it looks like, and has bounced off this trend line. And now today, on Wednesday, it's up $25.
Before we move on, I would like to say that if you're a little confused or you're new to our show about this discussion of relative pricing in metals, or what we call ratio trading, I'd encourage you to scroll down to the description below. If you're watching on YouTube, we will have a link to a special report where we further discuss some of the investment and trading strategies we employ with our clients, how these prices play against each other, and how you can actually double your ounces by going into the right metal at the right time at the right ratio.
Yeah, and when you're talking about the platinum palladium, we're not talking about doubling your ounces. We're talking about tripling and quadrupling.
So now the big question is, why are we not getting the drop in the pricing, especially the gold
Ding, ding,
pricing that
ding.
we want to see? So, and I see Tori's eyes light up. It's your turn.
No, I'm excited actually. I don't want to bias Robert. I want him to answer this question first. I don't know. I'm curious to see why you think.
I have the answer, and it's not
The
manipulation,
only answer.
but you could say it's manipulation by big money. It's more buyers than sellers because people are buying gold. Even though Americans aren't buying gold and the public is clueless about buying gold until the last phase of the bull market, we have seen huge amounts of central bank buying of gold this year, more so than when Nixon took us off the gold standard in 1971. And that's smart money, institutional money, buying ahead of what has to be some kind of crisis. We don't know what that looks like. I mean,
Something's being
the
predicted.
repo markets are indicating the same thing. A number of other indicators are indicating the same thing. And gold is a barometer. For gold to launch from where it did in May at mid-1200s, up to 1550, and to hold above that high for as long as it has, and it's consolidating here, it's obviously something's changed with the gold market, because you have institutions buying it,
You're right.
propping
in the
that
past.
price up.
Yeah, and in the past we would have seen it absolutely come down by now. Low 1400s.
If
would
it
be-
was just a trade,
yes.
absolutely.
Yep.
Yeah, something has shifted in the gold market. I can't stress that enough. Big
Something's far
big
more
things are to
reactive.
come.
Yeah.
Don't know what that exactly looks like. A lot of people have talked about the crisis not really affecting real estate values as it did last time. May beg to differ a little bit on that, but you have three different markets that are all at very high values: stock market, bond market, real estate market. And when money starts to move out of them, gold has already drawn the attention of market participants, so it's already kind of flashing green. If you were to look at an indicator on a computer screen that says what has turned bullish as a widget, well, it's gold this time. So yeah, I think you're really in for a good few years here with the gold market.
See, I'm glad I deferred to him, right? That was I would add a fourth market, and that's the dollar market. So if you're looking at the currency, you've got essentially another bubble going on there. And I think the recent drop, it's been a long time. We've called Robert King Dollar in here because he's the master analyst when it comes to the U.S. dollar and currencies. But that being said, we've seen this drop in the U.S. dollar. That obviously is going to prop gold up a little bit, right? Two other things. Geopolitics. We've got the Russian-Turkey alliance in Syria, okay? And I know you guys tease me because I'm fundamentally based and I probably read too much. But the third one is political instability. When there's this level of instability and uncertainty in our dollar-denominated gold market, you're going to see gold at least hold in there steadily and quite frankly predicting that it's going to run. If we see this impeachment process play out much further and it starts to become a reality, gold will respond accordingly because like Robert, you're saying, it used to not be as reactive for whatever reason for a long time. Now it's doing what it's supposed to.
Well, I think people's trust has been broken. I mean, the trust individually on our institutions, the institution of government, a lot of people don't trust it anymore because you have all this corruption going on, whichever side of the aisle you're on. Doesn't matter. There's corruption all throughout D.C. Then you have breaking of trust all throughout the world, and you have breaking of trust in the faith of the central banks. I mean, the central bank community isn't trusting each other, and therefore they're buying gold. So that I think is what's coming is more breaking of trust, and then people positioning accordingly. Which
yeah,
I
if
think
that weren't
benefits
true,
gold.
Yeah, and if that weren't true, gold would be doing what oil's doing. Gold would look just like oil right now, in my opinion.
Speaking of the dollar, let's touch on the dollar index because it has taken a hard hit in the last week or two. A lot of that has been just a shift into other currencies, specifically the pound. I mean, the pound has rallied from 1.22 versus the dollar to 1.3 recently. I mean, that is a huge move for a currency.
In that short period of time.
Right. Even though it's probably news-based, it's a huge move. So those currencies have popped up and the dollar index has come down. The dollar's probably ready for a bounce back up.
Sure, and we've had that like multi-year rising channel for a while in the dollar, which we're pushing down close to. So that's going to be the test. I mean, ultimately, we've been on the same page for years, right? The dollar's going lower, and not just a little lower, substantially lower. The question is, how high does it go before it goes low? And with this definitely not quantitative easing package that's coming out right now, the double super
Q4.
secret probation quantitative easing package, that's not QE4. Don't pay attention to the free money behind the curtain. Dollar's got nowhere to go but down eventually. So I know this is a global market. I know everybody inflates their currency, but the reality is we still swing the biggest bat. And as goes the U.S. dollar, so goes the rest of at least Europe, if not arguably the rest of the world.
Well, and it's an expected move in the pound. I mean, it's about time there's a stronger currency, even if it's a short-lived opportunity. And that's all Brexit-based and some success finally in Parliament. But we'll see what happens there with this hard Brexit, October 31st, and whether or not that plays out. But at least Boris Johnson was able to make a little bit of headway, and that's why I think you saw the pound do what it did.
I would agree. I have to say something about the Federal Reserve's QE, non-QE thing, because, I mean,
right.
Who do they really think they're fooling? I mean, if they're putting that out there to the market participants who actually pay attention to them, nobody who participates in the market actually believes it's a non-QE QE,
right.
And then the public doesn't even pay attention. So if you're trying to deceive somebody, who do they think they're deceiving, really?
Well, arguably, I mean, 10 years in now, they've got even the people in this room calling it QE. Remember inflation? Because that's all it is. We used to call it inflation up till about 10 years ago, where they said, let's not call it that anymore.
Good point. Way to make me feel foolish.
So 10 years from now, we'll all be sitting around going, well, here's this new not QE package that got delivered, or whatever other name they come up with. So, you tell a lie long enough, strong enough, and with enough gusto, and eventually everybody will just start agreeing with you to get you to shut up.
So the key to that, for you to compare the QE to inflation, that's exactly right. All right, let's remember Monopoly. I think everybody that's listening to this show has played Monopoly. What happens when you inject a bunch of money into the board, right? Everybody in the game has far more money. Well, what happens to prices, right? You're not selling your boardwalk for face value. You're selling it for $5,000, 10 times face value. That's what pumping money into the system does. So just go back to your old monopoly days and wonder what's the end result ultimately of this non-QE for.
And I'm impressed that Tori remembers what the face value of boardwalk is.
$350 for Park Place.
Yeah.
Yeah. I just remember getting out of jail cost $200. Well, that's going to do it for Golden Rule Radio this week. We appreciate, as always, you stopping by. If you are new and haven't clicked the subscribe button, please do so, ring the bell, and especially, as we mentioned a moment ago, scroll on down, pick up your free copy of our special report, How to Double Your Ounces, discussing our ratio trading strategies here with McIlvaney ICA. You can also head on over to our website, McIlvaney.com, Twitter, ICA Gold, or Facebook, McIlvaney Financial. And as always, if you'd like to discuss your personal portfolio and how to implement those ratio trading strategies for yourself, give one of our advisors a call at 1-800-525-9556.
Thanks for listening. Have a great week.